Hello everyone, welcome to Voice Behind the Keys. I'm Dexter here. I have been investing property for the past 16 years and been in this property industry for the past 10 years, specializing in a property strategizing investment portfolio, specializing in helping clients to build their wealth through property investment. Okay, today I have received some questions from my mailbox. Let's find out what they're trying to ask. So what's the first one?
I already got 2 properties. Should I invest more or stop first?
Okay, you already got 2 property or 3 or maybe more, but should you go for it or should I stop? First thing first, you must see your financial status. Most important, you must understand property investment is all about cash flow game. So you must be cash flow strong and financially sustained before you continue to invest. Financial is a bit tight, yeah, you should be put it on hold. But if you say I already got 2 property, 3 property, but maybe you are a multi-millionaire or you've got 500k or like 1 million sitting in the bank. Okay, why you put the money in the bank? Because we all understand that cash putting in the bank, it depreciates due to inflation issue. So if your financially is very sustained, you got spare cash, so you put in the property for safekeeping to generate good rental is also kind of way for safekeeping for your money, because nowadays there's a lot of online scam also. So actually putting the money in the bank in the FD also is not really that safe because of the liquidityness. Okay, but putting the property, what's so good about it? Because you take some tiny, maybe 50% loan or partial of the loan from the bank, then the property will charge the things to the bank. So I don't think in liquidation or law segment, anyone dare to touch bank's asset lah, in a way. Maybe majority of us, the question will be, actually my financially so-so, but I feel like want to invest. So should you continue or not? There's another question, are you doing it correctly? Let's say if your property that you brought, the past property is like rental car installment, example, the pool property. So you don't really have any financial burden. The location is, you can absolutely very sure that it's very high occupancy and easily to get tenant. So you don't really have any cash flow stress, and the situation, you got some spare cash for down payment because the property is 70% loan from the bank. So in this kind of situation, I would recommend you can continue to look for property to invest. If let's say you already got 2 property, but actually you screw up. Once upon a time, the old man story, we used to play, there's a story called compressed loan. So you buy a very bad location for cash out purpose, and the rental actually, not to say very good, you are facing some cash flow issue, then I would say put it on the hold is also a good choice.
Market's so bad now. Should I hold or better flip for my property?
Okay, market, agree and disagree. Market is kind of like slow down. The property market sentiment is not strong and good as the past 5-6 years ago. It kind of slowed down a bit, but not to say bad until like crisis or property market bubble. No such thing happening. Okay, in this kind of situation, maybe some buyer will tend to outpatient because last time, like 7-8 years ago, we used to have norms that we say property price will be double in 10 years. Okay, that's an old man story, but so far it didn't happen. But does it really the market price drop and bad? Depends on your location. If you buy on a very good location with good rental yield, so far nothing's happened. That some of the location you will see a property price drop because of what? Because used to be there's a lot of so-called cash out project that you buck up the price at the future value for cash out purpose. And now it just reflects back to a normal pace. So you see the property price drop. So it's not really a market is so bad now. So the question is, first, is still the same question. It's a cash flow game. Let's say you buy a property, maybe your installment is talking about 3,000. It's very hard to get tenant. And the rental is very bad. Like maybe it's only rent out like 1,500 or 2,000. Every month you need to fork up extra 1,000 for the installment plus the maintenance. You may look option to flip, not to say flip, sell off. But before you make the decision, you need to look into whether really the property, that location really no potential. It's better to sell off. If you see it still got some potential, maybe you can consider to hold to monitor for a moment. But if you say you're having a very good location, like I brought a location called Velocity, my installment is talking about 3,000. My rental can go up to 4,000 plus. It giving me positive cash flow. Actually, every week I also receive calls from, I don't know, so-called agent asking me whether you're interested to sell. So my question will be, what for I sell? The rental is so tempting, and I will analyze this location is still very potential to me. And also, before you want to flip your property, yes or no, the second question you need to ask yourself before you make the decision is, after I flip the property, after I get back the cash, what is the second step? If you say you flip, you take back the cash from the property, okay, you've got better planning or investment option, then you can option for it. If you say, I don't need the cash, but the property is giving me a very good rental yield, I would say no. Because what? After you sell off the property, like the example of my Velocity case, I can sell, I can make money, but the question I'm asking myself also same. After I sell off, The cash also went back to sitting in the bank, which I don't really urgently need it. So it's also giving a headache. So what should I sell? So I will option to keep it.
Why is my rental return so much lower than I expected? Any way to improve or at least break even?
Okay, you're asking me the question of why your rental yield is so much lower than you expected. The first question I need to ask is, are you doing your homework, your research before you buy any property, or you just take advice from agent? Especially when we buy property, we tend to go showroom with agent. There are many kinds, I can't say all, but many kinds of agent in the market. Some tend to be very genuine, give you a 80% to 90% accurate data. So it won't happen that say your property rental expectation is so much different from what is your expected. But of course, there are one kind of agent that we know that they know how to create a fantastic story. That's what happened why your rental is so much lower from what you expected. Okay, so when these kind of things happen, nothing much we can do. Okay, actually because you already signed an agreement with the bank, so you need to pay your installment every month. We understand that. So maybe you can look into the problem is whether is your rental strategy is wrong, because maybe that location is not suitable for long term. Maybe you can option into doing we call co-living, a partition room, to make more rooms to increase your rental yield. Or maybe if it's a tourist hot location, maybe you can option for Airbnb purpose. Actually, I can share some experience that I got one of the project in Jalan Yap Kwan Seng KLCC area. It's the first version of Airbnb project. So that time we forecast everything. Rental yield should be good, around 8 to 10% yield shouldn't be a problem. After taking the key, I'm experiencing from the poor property management from the developer side that they say you need to maintain at a minimum room rate, try not to sabotage the room rate. At the end, the biggest player who sabotage the market is the property management. So end up our rental yield is not to say very attractive, but it happened. There's an operator come and deal with me. You just rent to me, whatever I do, you don't care. Just rent to me, I will go and operate. So I guarantee you minimum. So end up, he giving me a very good offer, can cover my installment. So maybe I can change my strategy to long-term rent to Airbnb operator. So at least I won't face the problem of Airbnb return that fluctuating. It gives me a stable income that I got less headache. I can focus on my work. So maybe you can change your strategy in operating your property, or maybe it's the problem of not getting quality tenant because of your furniture is a bit old. You can maybe try to upgrade your furniture to get a more quality tenant, give you a better return. So there's a kinds of option. Maybe you can go and discuss with the experienced operator, see what is the option they can propose, things like that.
Managing few property already feel tired. Is there an easier way to handle all this?
Okay, managing few property, you feel tired. Is there any way? Actually, I own quite a few property, but I don't claim myself managing any property. So I don't feel any tiredness from managing it. Because the issue, I would say, is a business in property. So let the expert do their job. This is my concept. So I don't mind to share, to award the specialist to get the job done easily and professionally. But some kind of investor, they are too good in calculating. I would categorize this kind of client as an accountant that very good in calculation. Count until everything they DIY, they need to do themselves. End up it costs you more cost and more time. That's why you feel tired. Maybe if you ask me seriously, how is the easiest way? Long-term rental is the easiest way, because most of my property I rent long-term. Before you take any tenant, try to communicate with your agent or analyze the profile. Are they good quality tenant? So that's why I claim myself don't really have any headache in managing property.
After I buy 2 properties, will I have to get a loan again?
Is how you manage your property. First of all, the most common way is we call it rental income. Okay, because bank recognize rental income as part of income. You must firstly understand how banks calculate your loan. Based on your income, they deduct a minimum spending. They call it disposable income. So the balance will be we call it DSR, that allow you to borrow from the bank. So it depends on your income. So people have the concept of, I get the loan, it take up all my DSR, that's why very hard to get the loan. Actually, it's not. The most common part, first thing first, is make sure after you rent out your property, you make sure everything got rental agreement and all the income goes into bank. So you've got rental agreement, you've got bank statement. Shouldn't be, most of the bank recognize rental as an income. So it don't really use up any of your DSR. It's not really that hard to get loan after you've got multiple property. It's how you manage your portfolio, first thing first. And also second thingly is make sure you pay your installment promptly, because any late payment will reflect into a secret, and it will trigger bad scoring. Or if you're a higher level of playing property, you want to have a very big property investment portfolio, normally I would advise my client to seek a way to build relation with the bank and build yourself as a high net worth individual in the bank portfolio. So once you've got this portfolio, normally your DSR, I mean your borrowing capability is ×2, ×3, maybe ×5, even you can ×10 if you are high net worth individual in the bank. So it's how you manage, and you must know how to understand the bank, all the bank rules, how to get the things approved, and how you manage. So look for the loopholes.
Is it refinance worth it? When usually best time?
Okay, what is refinance? So refinance, it means that I already got an asset. Let's say I brought it, like I buy in 10 years ago, like 500k, now it appreciates up to 1 million. There is some cash value in the property, but I cannot take out the cash unless I sell it to cash out the property, or I refinance, reborrowing from the bank to cash out the money. People may have the very misconception of refinance means cash out. This is one of the functions. There are many other functions like bring down interest rate, re-strategize your portfolio, or change facility agreement, things like that. So when is the best time to refinance your property? First, if you want to refinance your property, make sure your property already appreciate some amount. There's some cash value inside your property. The bigger is the better, of course. So that's the best time for you to refinance. But if you ask me worth doing refinance or not, I can't really answer you this kind of question. It depends. Refinance involves costing, legal costs. Some of the people will tell you, oh, refinance is usually very cheap, only 1,000, 2,000. That is not really refinance. That's what we call top-up loan. Means that from your property already in the bank A that already appreciate, you squeeze, you ask the bank to further borrowing you. That's top-up loan. Involve much of the legal costing or agreement fees. That's why it costs you only a few thousand. But really, refinancing means that from bank A, you swap to bank B to refinancing it. Then you need to re-sign loan agreement and repay the loan stamp duty. So it may cost you quite a few thousand. Then you must understand, if I do the refinance, what benefit am I getting from this? Is it really worth to pay this costing? Let me give you an example. I did a refinance for my property last year, if not mistaken. It already appreciate quite a distance, so actually I can do cash out. But my case, I did not do any cash out. First thing, I re-strategizing. The original is a joint name property, so I just refinance it to under my name. So I free out my wife quota, first thing first. Second thing is a very old dinosaur term loan. That's why it's not a real flexi loan. So when I do refinancing, I got a facility called flexi loan. So whenever I got extra money, I can just dump in to save interest. So I get the function of that. Third thing, it brings down my interest. If your loan is those like dinosaur time term loan that using BR calculation, you might consider to look deep what's the rate, easily above 4% interest nowadays. So my case is from 4% I refinance, I bring down to 3.6. I save interest rate. And also when I refinance, I restretch back to 35 years. You may ask me a question, oh, we stretch to 35 years longer, then you pay more interest. Yes, where you see is, yeah, I pay extra interest, but I restretch to 35 years, I bring down the installment tiny a little bit, and I got some passive income from my other property investment portfolio that pay me good passive income to pay this property particularly. That's why I can say this property, even I stretch to 35 years old, is still considered someone is paying for me for free. So I spare out my cash flow, I can less burden and more focus in my work. In long run, a few thousand, 35 years loan, I bring down my interest rate to 3.6. I save roughly 70 to 80k of interest in long term. So in long run, I still win. So there are multiple angles you need to consider when you do refinancing. That's what expert playing.
Should I continue investing in residential, or is it better to switch to commercial?
It's a different games. Okay, you must understand. Let's say we say residential, very common, very likely, maybe a condo, maybe a double-story landed, it costs you maybe less than $1 million. When it comes to commercial, it's talking about $2 million, $3 million. You may say, hey, there's some cheaper commercial to buy. Okay, maybe some light industrial or further location. That I would say, that kind of location, are you really ready? Residential, yeah, it don't really make you a big fortune, but it's a low risk game because now you can easily get a very good location, especially condo with MRT, with more near city center, zero down payment package. So you don't worry of getting tenant. Maybe the rental can cover your installment, maybe you need to fork up a little bit, but it's very stable, low risk investment. But when it comes to residential, normally for good location, the price will be a bit higher. Maybe cost you a multiple of millions. There are not much of new launch of commercial in the market. Most likely good location will be happening in sub-sales. When you come to sub-sales, means what? Down payment, 85% loan, 15% of down payment plus MOT, legal fee. It easily costs you a few $100,000 of down payment and legal fee. Are you ready for it? Maybe I can option for a new launch, further location, new area. You can do that, but normally commercial, new location, it takes you a few years to fully occupy. So when window period of getting the area to be prime, to be fully occupied, do you have enough capital to sustain your installment? That's another question to be asked. So if you ask me, should I continue in residential or commercial? It depends on your initial capital and your risk appetite of tolerance before you make the judgment call. Thank you everyone for your time and support. Feel free to leave the comment below if you have any question about property, and my team will look into it and arrange a schedule to answer your question in the future time. Thank you.